Warren Buffett has been accumulating a secret stock position for the last couple of months, and we knew that because the SEC told us, but we've just heard the name of the stock. So everyone's now running around like headless chickens talking about what that stock is. And yes, it's interesting, and I will tell you what it is and why he bought it and show you the numbers. But isn't the real question, how can he keep this a secret from the market? Why should Warren Buffett be different from any other fund manager out there and be allowed to accumulate in secret so no one else can get in on the deal, keep the share price low while he's buying? What's with that? Is that one rule for Buffett, another rule for everybody else? So that was my question when I first heard about this. So I thought, let's research this. So I just literally went into Google and typed in, how does Buffett keep share purchases secret? And you then see a bunch of stuff, Reddit coming up nowadays with all the glorious information out there. And yeah, you click on the Financial Express here, for example, which looks like an Indian website, and it says Warren Buffett secretly adds new company to the portfolio. Now, the SEC requires all fund managers with assets over $100 million to publicly report their stock holdings using a Form 13F. Now, does Buffett have more than $100 million? Heck yes. Should he therefore be disclosing the stake? Yes, but he hasn't. Why hasn't he? Well, when you scroll through this and you dive a little deeper, you find that there is something called a confidential treatment requested. Little paragraph inside the SEC's obscure rules, and it allows a fund manager to go, I'm buying a lot of this, I'm a big whale, but I don't want anybody to know. And then the SEC goes, all right, we'll keep it a secret for you. Is that how it works? Not quite. There are some rules to this. So I went onto the SEC website, and yes, I used to be a banker and a lawyer for a bit, so I like digging into these things. But I think it's important to understand this. Is this just market manipulation? Is this incredible unfairness? Or is this common practice? And there is a law passed by Congress that says the Commission may grant confidential information treatment for Form 13F information, which is where you should normally disclose all your shareholdings every quarter. But such treatment is available only to those instances in which an investment manager demonstrates in its application that confidential treatment is in the public interest. So I thought, why is it in the public interest that Warren Buffett makes more money and pays less for the shares? Is that really in the public interest? It's in Warren Buffett's interest. It's in Berkshire Hathaway shareholders' interest. But that's a relatively small group of people. The public at large, do they benefit from this? Well, let's see. Read on. And yeah, in Congress, in 75, the Congress passed this law, and they basically gave a rule when these exceptions apply. And it says information that would reveal an investment manager's program of acquisition or sale that is ongoing both at the end of the reporting period and at the time that they file the 13F. And the committee believes that generally it's in the public interest to grant confidential treatment to an ongoing investment strategy of an investment manager. Disclosure of such strategies would impede competition and would cause increased volatility in the marketplace. So hang on. When do you file a 13F? 45 days after the end of the quarter. So what they're saying is, at the end of the quarter, the last day of, say, March, 31st of March, you start buying the secret stock. And I'll show you in a second what it is and what the numbers are. And then you continue nibbling on this for 45 days when you have to file your 13F. And then you can just say, sorry, SEC, this is an ongoing purchase, and therefore please make this confidential. And then the SEC goes, sure, let's keep it confidential. And then you have another whole quarter in which you can secretly accumulate your position, and only then do you need to disclose it. Sounds kind of like one rule for them and one rule for us, doesn't it? It's just written for Wall Street. It's just a rule written for Wall Street. So yes, every fund manager out there can use this. It isn't just Warren Buffett. It's just that he knows how to use these tricks. But it seems another way to keep retail investors, you and me, in the dark. And it gets worse. The Commission has supplemented the category information. So the SEC has come out and said, okay, Congress made this great big gaping hole in these rules that anybody can drive through, but we've added another exception here so that our hedge fund pals can really do whatever the frick they like. And what it is that you get confidential treatment if the investment strategy utilizes block positioning. Now, block trades are what? Well, let's ask Google, right? What is a block trade? A block trade are privately negotiated transactions that meet certain quantity thresholds. So, hang on. This is basically a dark pool trade. So you're saying, I, Warren Buffett, am not buying these shares on the general market. No, I'm going to other institutional investors. I'm asking Morgan Stanley and JP Morgan and the big banks and say, you got 1 million shares of this. If you do, we will privately negotiate a deal. This will not show on the stock exchange. We'll set the price, not the market. And we will hide this by making it a block trade, which happens in like a private exchange, a private dark pool, and therefore we keep the public completely in the dark. And by doing this secret little shady maneuver, we also get confidentiality treatment from the SEC. And apparently this is in the public interest. I mean, come on, give me a break. Seriously, this is in the public interest? Okay, so that's the rule, right? So he's compliant. It's within the rules. There's nothing you can do about it. It's very unlikely to change. The SEC is a puppet of you know who. And the question then just becomes, what's the stock? This is the stock. It's called Chubb Limited. Chubb Limited is the company that makes locks. Yes, he's invested in a very, very large locksmith. No, not quite. Chubb is a very large insurance company based in Switzerland, and he likes insurance companies. He's building pretty much the world's largest insurance company. Now, overnight, as I'm recording this, the stock is up as the cat came out of the bag, so to speak. The stock's up about 10%. And can we make money out of this? I suppose that's the next question, right? So let me answer that question in a moment. But first, let's just have a look at some of the data, and I'll put them on the screen here for you so you can see what they are. But from a financial health point of view, cash flow is B, which is really good. Growth health is B, which is really good. Price momentum means the stock's gone up a lot, so it's not super cheap. But profit health is glorious, and a relative value as C is almost unheard of. This is a value stock. This is a fairly inexpensive stock with some pretty amazing numbers. And when we look at cash flow, and I see that they have $13 billion free cash flow on 50 billion revenue, you can see why Warren Buffett is in Warren Buffett, heaven. Not literally. I wish him a long life. I love the guy. Nothing against the guy. I'm just ranting a little bit against general unfairness in the market. There is a rule for hedge funds and big banks and big investors, and then there is the rest of us. Now, does that mean we can't make money? No, we can still make a load of money, and we intend to, and we continue to. But it's a bit of a scandal, the whole thing, I would say. I think there's really nothing else I can say about that. Now, how could we make money with this? So I went over to optionswatch.io, which is the platform that we built. Get yourself a 30-day free trial. And one thing you can see is these green bars here tell you where call options are positioned. So it tells you where the market's positioned. And there's a fair bit of call options at 270. I thought for a moment, did Buffett buy call options before the announcement to profit from the spike? He didn't, because that would probably go into a real gray area of insider sort of trading. So they didn't do that because the volume isn't large enough. There are only 2,000 trades here, so it's not large enough. So what could we do? Well, the share price has jumped up a lot. So probably if you bought a $270 call option, like a month out, say, then that would probably cost you about $600, $700. And if it then went up to, say, $300, you'd make a 6,000% return. What would be your risk? the $500, $600, whatever this option cost. So something I might look at doing maybe at the opening of the market today. Let's see how the pre-market treats this, because people tend to get a little bit in on the news late. So there is sometimes we can chase a trade a little bit. Yeah, I wouldn't always be cautious with that. Tight stop losses and so on. It's obviously not financial advice, and don't YOLO into something. The market could also go, okay, now we know the news, and start selling it off. That might also be what happens here. But in short, he's bought a good stock. He paid a fair price. The free cash flow of 13 billion is going to make him a heck of a lot of money. And if you think about it, right? 50 billion revenue. What's the market cap on this thing? 100 billion market cap, 13 billion free cash flow. You could actually buy the entire Chubb company, borrow some money, and in 7 years, you'd have the whole thing paid back through free cash flow if it wasn't going to grow, which means it's a doable thing. It's actually a takeover target. Really, it really is a takeover target with these kind of numbers. So totally makes sense what they're doing. I don't like the way the market's regulated, but I can't change it. So all I can do as an investor is learn to make money and learn to trade, learn to invest. And that's really what this community is all about. So stick around, hit that subscribe button, and maybe you'll join me for a live trading session next week if we do one, or you just go through our educational playlist. Literally, there is a playlist called educational videos, and there are a load of them. You might have to watch some of them more than once. And if you have questions on any of them, ask, okay? Just put it in the comments. I see all your comments. I reply to pretty much all of them, at least the sensible ones, and the funny ones. I like the funny ones. And I love you for watching. I love you for tuning in, and keep building wealth. Nobody else is going to do it for you.
Palantir is frustrating the heck out of retail investors, and I want to address this. Is it really just time to throw in the towel, or is Wall Street really missing something here? And what's driving that massive share price dump after earnings, and why isn't it going back up straight